Yesterday I was busy researching and buying SFC Energy because they've just announced a huge order supplying fuel cell systems to the Ukrainian military. And they upgraded their financial guidance with the midpoint adjusted EBIT increasing 77%, while the share price only increased 7%. Also, based on the new guidance and the share price close of yesterday, they trade at an enterprise value to adjusted EBIT of 13.7. SFC Energy has a lot of short-term and long-term structural tailwinds from exposure to energy, defense and security, semi-conductor, and they are maybe about to start supplying data centers on top of that. And also, it may not give much credit today, but it's all based on green technologies with low emissions. Let's unpack all of the details. Starting with the record 42.7 million euro order for delivery to Ukraine this year, supplying combat-proven hybrid energy supply systems for the military and civilian applications, and the order is funded by Germany. SFC's technology enables resilient, decentralized energy sources that are virtually signature-free, meaning they are not emitting heat or notable noise, which is very important at the front line. And they can supply critical systems like drones and communications. The order is mainly for the Ukrainian National Guard, but SFC Energy are very optimistic about follow-up orders from the conventional military and special forces. Based on the 2022 numbers, the National Guard make up about 12% of the armed personnel in Ukraine. The order was much larger than forecast by SFC Energy. They only raised their guidance by 14 million euro despite all of the 42.7 million euro being delivered in 2026. And they explained that was because they had 10 million roughly in their forecast already, which was the expected part of the order. And then they upgraded with 14, and the remaining part, SFC Energy explained, is due to risks of ramping up the supply chain to deliver everything on time, and some projects they expect to sign but have yet to actually sign for delivery this year. To me, this sounds like there's a substantial chance of a guidance upgrade later this year, and I also think it's a pretty good signal that a cash-strapped Ukrainian military places an order that is much larger than originally planned. Also, I think Western militaries are looking at Ukraine's combat experiences and seeing that maybe the next generation of off-grid energy supplies needs to be low emission to stay stealthy in the new world, with drones being a near constant threat at and also close to the front line. So for me, this increases the likelihood of a large-scale rollout in Western militaries. There's already a small-scale rollout in Western militaries today. Looking more into SFC Energy's businesses, they report on two business areas: clean energy making up roughly 70% of the business, and clean power management making up the remaining 30%. The clean energy business is based on a world-leading fuel cell technology. SFC Energy develops and manufactures cutting-edge hybrid power systems for off-grid, stationary and mobile applications. And there is a rapidly growing global demand for resilient, decentralized energy supply in military operations, for public security, critical infrastructure surveillance, as well as in industrial applications. The main downside are high upfront costs compared to conventional alternatives like diesel generators, but SFC Energy claims the full lifetime costs are actually very competitive and lower than the conventional alternatives in many cases. The clean power management business supplies high-precision, energy-saving power management solutions for high-tech companies in the semiconductor equipment industry, defense, life science industries, And SFC Energy notes good traction in the Netherlands right now, which I think is driven by their customer ASML. If we look at the geographical footprint of SFC Energy, a little more than half of their business is in Europe, and North America make up around 35%, with Asia making up the rest, of which India is the vast majority today. In the last year, they've had some delays in the US with the tariff situation, and India has also experienced some ups and especially downs lately, but are expected to pick up steam again soon. The bull case for SFC Energy is that they have strong short and long-term structural tailwinds from their exposure to energy, defense and security, semi-conductors, and they may even soon land their first data center orders. Management is very optimistic about follow-up orders after the record 42.7 million euro order for delivery to the Ukrainian military in 2026. And to me, it also makes sense that it really increases the likelihood of broad rollout in other Western militaries. SFC Energy has the potential to be a big part of the next generation off-grid power solutions for militaries and other similar applications, although, of course, it's far from certain. And while most, if not all, of SFC Energy's competitors in the green fuel cell space are loss-making and fighting for their survival, SFC Energy is thriving, and their products are chosen right now by the customers, not because they're green, but because they're good and competitive. So the day the green narrative again becomes more important for the financial world and in the real world, I really see a huge potential for SFC Energy really being one of the big winners. If we look at the bear case and the risks right now, SFC Energy has to execute and deliver on this huge order, ramping up their supply chain. That's not easy. And also competition is always out there and ready to take your business from you. This huge order is only for delivery in 2026, so without follow-up orders, there will be a gap in 2027. There's a chance of peace in Ukraine, which would be amazing, but obviously it would hurt SFC's future prospect in the defense business. It would take some of the urgency of the rearmament in Europe away. But unless the peace is really leading to trust between Europe and Russia again, I do think the military build-up will continue, but just with less urgency. And lastly, SFC Energy's business has been quite volatile in the last couple of years. They were booming during the post-COVID boom, with the green transition really being a huge narrative both in the financial markets and in the real world. And although they managed to stay profitable and maintain a good business, they have been hurt in the last couple of years. Now it really looks like the short-term outlook is good, but it can turn bad again sooner than one may realize. Thank you for watching, and please read our disclaimer. This is just an introduction, not financial advice. We do plan on evaluating our investment in SFC Energy at a later stage. I'll see you in the next one.